Good morning, ladies and gentlemen. This is Clueless 8, and this is a pre-market AM report for February 18th, 2016. Let's start. We have had a blistering, powerful rally off a double bottom that was identified and clearly shown repeatedly on my charts. Suggested trade alerts were put on at these levels, and obviously the active and disciplined traders and the ones who took the risk that's always needed at tactical, tradable market bottoms that you're looking at, not just here, but also on August 24th and September 29th, two dates that I've mentioned repeatedly in my videocasts, on my Periscope broadcasts, and shown on my charts. When you get to these levels here, when the emotional quotient, emotional fear is at extreme, where you can't turn the TV on without doom and gloom and the whole it's just incredible. I mean, it's all darkness out there. Um, Investor sentiment reaching historically low levels on the bullish side. McClellan, all the internals showing deep, extreme oversold conditions. Obviously, that's the best opportunity. But as human beings, that's the most difficult time to put monies in the market. There is an easy way out. You can put a little bit of money in the market at that point and see how things go. And as the market moves forward, and of course the market's made a move of almost, I believe, more than 1,000 points or close to 1,000 points on the Dow Jones from this climactic bottom just last Thursday. It wasn't even like 2 weeks ago. It was last Thursday afternoon when we bottomed. It seems like you'll never get an opportunity to buy into it. Well, there's another saying in the business that I've mentioned many times, and I just don't mention. These are actual experiences. The hardest thing to do in a powerfully trending up market that we're going through right now, rally, is to buy into it. Because you always think, well, if I buy it right now, that's it, the market's going to crash. The key is technicals. The key is to study and make your own decisions based on the charts that I'm producing on an hourly, on a daily basis. The tactical charts that I put out there is not just for fun and games. Those are to make money. Those are things that to change your material, hopefully your financial wealth to a degree which it impacts and brings back the confidence that's needed to make more. After all, the business of life is living, not business, right? I think Malcolm Forbes said that. So if we're going to live well, then we better do well in what we do, which is a business, in this particular business, the business of making money off financial markets. All I know is one thing here, that a significant portion of the trading public did not buy at the bottoms. Neither did they buy on these huge 200-300 point bars as they move higher. A minority did. And the tactical minority who did, even within our group, within the Clueless 8 trading group, been extremely happy. I don't need to pinpoint all the large winners that we have had repeatedly, including the earnings plays, the ER plays that I like to call it. Right? Bunch of them. Name it. Fossil, Priceline, numerous ones. Priceline, the charts were repeatedly laid out for people to see. To take a tactical bet with a small hedge, maybe a put, a couple of puts to protect the downside. Buy the common if you don't want to play the options. Buy a few shares. Like I always say, buy one share. Who cares? At least you're in the game. It's the mental part that really brings you to that next level. It's not the monies that you put in. Yeah, you feel like crap because you didn't buy 100 shares and the things and the stock was up $134. That's $13,000 plus dollars in one trade on 100 shares, which a margin account can pretty much handle. A day trading margin account can handle with the leverage that's given. You can buy 50 shares. Listen, I'm not here to trade manage you. You know, I've said this before, I'll say it again. I'm not here to run your books. I'm not here to tell you exactly how you're going to place your trades, all that stuff. I'm suggesting some fantastic ideas that are working, whether it be Chipotle, whether it be Priceline, whether it be Twitter, whether it be Netflix, Amazon, Google, you name it, Priceline. These are suggestions. You decide what you need to do. That's where it comes in. Manage your own trades. In the meantime, let's see what's happening on the technical side. Okay? And I wish everyone well to do what you need to do, but recalibrate. 2016, if you want to remember what you need to do, go to the website, reread the 2007 Clueless Trading Mottos. And one of the key things is we need to recalibrate. All of us do. We need to recalibrate our brain. Let's be more mechanical. Let's try to mimic the machines, what they do. And that's what I'm going to get into right now. So let's look at some powerful pattern symmetries that are in play right now. I repeat again, this was the climactic flash crash, August 24th. Here was September 29th. Here was the massive crash, the oil collapse, the high yield, you name it, China slowdown. That was in January, right? Here was the retest in February, just last Thursday. It just seems like endless. These, this climactic, capitulative, forced liquidation selling, hedge funds blowing up, incessant news of the world coming to an end. Central bankers don't know what the heck they're doing. They've lost control. All kinds of stuff. I mean, it's just, it's a perfect storm. Just the way it always happens. So let's look at the similarity. Do I need to point this out? Even a kindergarten kid can know this, okay? Look at the similarity. Right there, right there. You got a double bottom. So where do we go from here? That's where the hard work comes in. So look at these lines here. You got the 34-day moving average here in dark orange, and you got the 50-day moving average down here. Just the way you had the 34-day moving average here and the 50-day moving average here. The crossover did not happen, just so you know, till down the road. The crossover of the 34 over the 50, which is considered a very powerful buy signal if you want to look at it that way, okay, did not occur till mid third week in October, if I'm looking at the dates here. But that was after a powerful rally. And then another 40% of the move was left after that crossover happened. So let's see where the crossover is happening here. Lo and behold, there's no crossover. Just the way as the markets were rallying here at this stage, there was no crossover. Look at the 34-day moving average and the 50-day moving average. Still moving down, just the way they're moving down right now. Right? The key is, are they going to turn will the market keep on running higher above the 50-day moving average? In other words, we have crossed over you can clearly see that here. You can clearly see. Look at this hand bar yesterday. We crossed over powerful, what do you call bread thrust? Powerful move, okay, over the 34-day moving average here. I didn't expect it right away, but what am I to say? I'm just a student of the market, except I read the market better than most people. So here are the signals they're sending us that they want to they took out the 34-day moving average higher. That's good. Now the next engagement with the 50-day moving average comes in at around 1950 on the E-minis. Remember, these are the E-minis. These are S&P futures. So the E-minis are telling us around 1950. I believe that's around 1955 or so on the S&P 500. We'll look at the S&P 500 right away after we finish doing the futures here. Now, another very, very important reminder, which I want people to not just remember, but write it down in some part of their mental frame so they can remember it every day, is that if you know how to read these levels, and and the way I show them, the way I draw them, the way I explain, then you can manage all the trades that you do in the market. Because after all, when that big bulk of selling hits the buying hits the market, of these climactic levels, okay, you can actually see, you can manage the trades on the stocks that you're trading. The 20, 30, $40 movers, the $100 to $200 movers like Priceline, the Regenerons, the biotechs, on that side, which perform as the markets go higher. You can manage all those trades only if you understand what the backdrop is. If you do not understand this backdrop, you cannot manage those trades and you will lose money. There's no question about it. So that's all you gotta remember, you gotta keep on reminding yourself, recalibrate your brain. We all do. Some of us need to do it. Some of you need to do it a lot more, and some of us need to keep on constantly doing it and keep on refining what we have learned over the years. So the 50-day moving average is in here. It's inside this channel. Look at this channel. These dotted lines weren't put there to make the chart look pretty. This is a powerful trend line channel. Once you enter the channel, and let's say you cross over the 50-day moving average, you start to basically jettison higher. It happened here, except in this case, the 50-day moving average was still below this channel. But of course, I'm sorry, at that point it wasn't, because if I draw the lines from here, that's a separate set of lines. So it's the same thing. It's pattern symmetry at play. It looks very likely. It looks very likely that we are going to basically hit some sort of roadblock right here. Why? Because that's where we failed before. So there's a natural inclination and a technical inclination at this level, close to where we are, roughly about 13 S&P points higher or so, which I think we get by tomorrow, that, and which coincides with hitting the lower end of this of the channel, that at that point there was going to be some profit taking. If we have another failure here like we did back on the 1st of February, obviously in that case, and I've explained this before and explain this again, show it again, obviously at that case we are going to start to trend down. Now, trending down doesn't mean the end of the world. We can engage at around 1885 or so on the E-minis. I'll show the same stuff on the S&P 500 on the next video cast. So we can move down like this and move from here, or if things are really going to unravel, then we're going to come down and test again the low 1800s, in which case we have a triple bottom or we fall apart and then the 1700s loom. So we don't know yet. Looking at everything that's going on here, if this pattern symmetry continues, based on what we saw back in October, August, and September of last year, we all have very, you guys, a lot of you have very short memories. You have absolutely no idea what happened at that time, even though you were trading at that time. Okay, so this is a refresher. So the bottom line is, if that happens, yes, we stay overbought, but look what happens. We remain overbought, just the way we remained oversold down here for a whole bunch of days, if not 2 weeks. Okay, the bottom line is that you can remain overbought. That's the case that's going on right now. So we don't know whether this is going to be just a V-shaped, okay, hit this mark here at around 1950 or so on the E-minis, and then, and then go straight down like we did, or is this going to go sideways like that, like we did back here? We don't know yet. Once we enter the channel, and I believe we will engage the downward sloping 50-day moving average, at that point we'll see what happens. In the meantime, short-term indicators are very overbought. You have to manage your trades, take your profits, leave a little bit out there, and you got to be selective in what you're doing. So that's that's really what it comes down to. So I'm going to exit the E-mini part of the picture here. The charts are put in, all of them are put in there for all of you to see. It's not that difficult. But you have to know the mechanics of how these things are working and what to read. For that, you listen to my video cast, but more importantly, you sign up for the advanced group sessions that I do on the weekend, and this weekend I'm certainly doing one. Okay? And that's when you really maximize the power of doing what you're doing. Otherwise, you sit on the sidelines, you move around like a blind mouse. That's a different story. That's a different strategy of trading. Another thing to keep in mind, look at this bottleneck here. Look at this bottleneck on the Darvas box. This is powerful. In my opinion, let's see which way it breaks out.